I hope everyone has managed to get a coffee and got a bit of energy back in the body. Now we are ready for our third panel, and we got Tim Jackson, who, amongst others, is the founder of QXL, and I've had the pleasure of spending a bit of time with Tim, and he's always very exploratory and probing when you spend time with him and interested in some of the aspects and topics that you're working on. So I thought he would be a great guy to moderate this, and I'll let Tim introduce his fellow panelists.
Well, thank you, Charlton. So welcome back from the break, everybody. And maybe I could just apologize for the large damp patches on my trousers and explain that that wasn't an unsuccessful bathroom visit. It was simply a measure of the weather outside on the way in. My interest in the topic of this panel and this session really arises from three things. One is that I run an early stage tech fund called Lean Investments. And my conviction is that many of the problems that we've been discussing are matched by exciting investment and entrepreneurial opportunities. The second is that for a couple of years, like one or two of the distinguished people in the room here, I was a member of the Digital Advisory Board set up by the Cabinet Office in the UK for the Government Digital Service. As is common with advisory boards, the board did very little advising, and what it was really there for was to connect the disruptors and the change makers in the Cabinet Office, both across the civil service and with people outside in the public sector who could help them get stuff done. And one of the key focuses of that Digital Advisory Board was exactly the issues of digital inclusion. And the third is that as a result of the startup that I did, before the IPO, we set up a small charitable foundation. And one of the activities that our foundation got involved with was funding community organizations in sub-Saharan Africa. And I was able to see there at first hand, first, how great are the needs of the unincluded, and second, what huge opportunities there are to use digital technologies, and specifically mobile, to solve those problems. So in order to discuss some of these things, we've got three stellar panelists with us. And what I'm going to do is to introduce them to you one by one and get them to tell you a bit about why they're here and what their take is on the story. Daniel Döderlein.
Thank you. So Daniel is my name. I'm the CEO and founder of a company called AUKA. You can see it up there on the board, previously known as Mcash. We are a technology provider, so we develop mobile payment platforms, systems, end-to-end. We were the first ones to do that in the Nordics, and we were the first one to launch that piece of technology into the Norwegian market, bringing mobile payments to consumers. We're here to let our voices be heard and see if there's anything we could add and bring to the process of including the people that are now, I mean, there's 2 billion people out there that we can address. And we see that our technology could probably help a lot of the financial institutions out there to address this market, both from a social responsibility point of view, but then also from a revenue point of view. And it's the way we see it, it's allowed to mix these two. You're allowed to make money on providing good services to these 2 billion people that needs to be included. So that's why we're here.
Cool. And Daniel, from my experience of the smart Swedes and Norwegians that I know, I'm always staggered by the fact that when they decamp to their summer houses for 2 months in the summer, their internet connection on the island where their summer house is usually 10 times as fast as the connection in London, Paris, or Berlin. Tell us why that makes, tell us why coming from Norway, which is not a conspicuously digitally excluded country, makes you more qualified than, say, a Rwandan to feel the pain of these issues.
Well, I think one of the major points with Nordic and specifically Norwegian technology is that if you look at the trends and you go back in history and you look at the different pieces of technology that has been adopted by our population, you see a trend. You see, we were the first ones to start to do text messaging in that region. Then everybody started to do it. Why that happened, I don't know. There's probably microeconomical reason for that. We got oil and everything. But the same is if you look at the coverage for mobile phones, if you look at the adoption of internet, if you look at the adoption of digital TV, and now financial services in the form of mobile financial services, it seems that we're setting a trend. We're doing this. We're early adopters. And the interesting thing for me then, being part of that digital revolution and providing that technology, is that if that trend is repeating itself for this type of technology, why not bring it out of our market and bring it to a global market, and specifically to the markets that need financial inclusion?
Great.
Because it will happen there anyway. And from a technology standpoint of view, many of these markets are in a position where we can see they do frog leaps, right? They've done it before, using M-Pesa as a great example. They do frog leaps on pieces of technology. Now, the internet speed in Rwanda is probably better than what you will experience right here when you're biking.
That's right.
So I think that's sort of the notion, to bring technology from a very mature market and bring it into the areas where you see frog leaps can happen. I mean, these guys will jump past card payments. You know, they're ready to move from trading in cheap rather than cash onto mobile. That's a huge opportunity.
Right. So this is beginning to sound like an analogy. I'm sure many of you have heard it said that if you want to see the future of video on the internet, you need to observe what pornographers are doing.
Right.
It sounds like the equivalent might be, if you want to know the future of mobile, then go to Norway. Nish Kotecha.
Sorry, that sounded like an excuse.
Absolutely. Tell us a bit about what you do and why you're here.
Thank you. Firstly, let me say thanks to our hosts and Viraj for extending an invitation. It's a pleasure to be here. I came from this world, so I spent 12 years in investment banking. Read a wonderful book called The Fortune at the Bottom of the Pyramid, written by a professor called C.K. Prahlad, who we lost about 5 years ago. He was my mentor. I thought, wow, what a wonderful opportunity. I went off to India and started engaging in financial inclusion about 10 years ago. And I built a company called Geosansar. Now, what is Geosansar? We are a branch-based agent bank in India. We have about 650 branches today. From day one, we've now served over 12 million customers. We open bank accounts. We do remittances. We provide insurance. And we're now just starting to provide credit. So if you think of microfinance going credit to savings, we went from savings to credit. And it seems to be working. Just this month, I think we'll cross the $1 billion mark in terms of cash transacted through our network. So I spend most of my life in India running the business. I also sit on the advisory board of Accion, which I'm sure you're very familiar with. I think it's the world's oldest NGO focusing on financial inclusion. And I'm also delighted to be a director, and have been for many years, of a financial inclusion forum. And our chairman, Tom Sanderson, is, I think, in the room as well. So that's the reason I'm here, and I'm delighted to be here. Thank you.
And Nish, just explain to us that it's often the case that entrepreneurs who are spectacularly successful are the ones who zig while other people zag. If you were to get an assembly of retail bankers from developed markets and ask them what they think about branches, most of them would say, the quicker we can offload them, the better.
Yeah.
And most of them would say, if they were trying to build a new greenfield bank, branches would be about number 100 on their list of things they wanted to do. Tell us about your decision to go the opposite route and why it's been successful.
I think my key, success is a matter of time, right? You never know if you're successful until you reach, hopefully, a pot of gold that appears sometime at the end. Branch banking, it's a very interesting question. The challenge for the unbanked is knowing who they are. It's all about KYC, and that is fundamental. Now, someone mentioned in an earlier panel, when someone walks into your branch, the old branch manager knew who they were, they could vouch for them, they could support them. That's banking. And when you're doing something that is really basic, opening a bank account and educating and helping that person on how to save, 20 pence, 50 pence, £1 a day, it's all about that human connect. Behind that human may well be a lot of wonderful tech, where I'm probably not the best person to design it, but I feel if it's user-friendly for me, it can help my business grow. So tech is the enabling factor, but the connectivity at the front end, I believe, has to be that human connect.
And just explain, a common model in Africa for delivery of financial services is to have a very strong human connection, but without bricks and mortar.
Correct.
It might typically be a microcredit institution where there'll be the lady who comes round to the village regularly.
Correct.
What was it that mandated the choice of a brick and mortar connection, come to my building, rather than I'll send my rep round to your house?
Well, I felt that two things. I felt that, number one, when you talk about your financial well-being, whether you're at this level or this level, you talk about it, where do you engage with that conversation? Is it in your home? Challenging, family, husband-wife dynamic, children. Or is it in an environment that we've been used to in the West, which is a branch? Now, when you come to that branch, I find my customers have a very different conversation with me than I can have in their home or in their workplace. Now, I do a lot of the education and supporting these customers, not only in my branches, but I also do go to their workplace. And if you Google Geosansar, you should also Google something called financial inclusion in the supply chain. And this is something we pioneered about 7 years ago, where we work with brands such as Marks & Spencer and New Look, and we go into their factories and we educate workers on the production line. Now, one of the complaints they had is, if I leave a production line, I lose salary. So we said, fine, we'll come to you. We open bank accounts on the production line itself. We provide education in the factory itself, and we enable their salaries to be transferred directly to the bank accounts that we open, and then provide them support nearby to ensure they can then manage their money confidentially.
Fantastic. So an interesting analogy to the situation at investment banks like Goldman Sachs, where you provide laundry services on site, so people don't have to stop working in order to take advantage of them.
We don't call it laundry services.
Right.
I think it has a different meaning in our world.
Yeah. So that's the perfect segue to Nick Williams, who has a strategic view as well as an operating view of banking.
Yeah, thank you. Good morning, everyone. Nick Williams from Lloyds Banking Group. On a day-to-day basis, I run the online service for the bank. So that's Halifax, Bank of Scotland, Lloyds Bank and Scottish Widows across all the devices, desktop, laptop, mobile, etc. We have around 12 million customers who bank online daily with us. As part of my agenda, I also look at digital inclusion. And from the research that we've done, there's a clear indication there's around 30 million UK citizens who don't have the right financial literacy. There are around 11 million UK citizens who don't have the right digital skills, and 3.2 million of them have neither. And therefore, we passionately believe digital is the single transformation of our generation. It's a gift that we have to improve people's lives, and we cannot afford or allow digital exclusion to encroach on financial exclusion. And therefore, we've set out a clear agenda to want to improve the financial and digital skills of all our customers and the UK by working with government centrally and locally to understand how we can engage, set the agenda, communicate some of the challenges, help sell policy centrally, but engage in the communities with small businesses and people, because it's about small businesses as well as consumers, how they can improve their financial literacy and how they can improve their digital skills to take advantage of both.
So that's fascinating. So from that figure you gave of 3.2 million, I think, it sounds like what you're saying is there's a bunch of people who don't know how to use a smartphone but balance their checkbook carefully every month. And there's a bunch of people who've got 500 apps on their phone but who have no idea how much money they've got coming in and can't figure their lives out. And there's actually only a small intersection between the two. And that would suggest, does that suggest that perhaps there's two different problems which are almost unrelated?
I think they're related,
right.
And they do cross over, and therefore we talk about Generation X, and you're absolutely right. The younger generation typically are digitally savvy, but they're not financially literate. They don't necessarily have the life experience and the life skills to understand what a mortgage means, what a credit card is. Likewise, the older generation, a bit more life savvy, had gone through life experiences, generally have created wealth through their lifetime, and therefore have the financial well-being and understanding, yet have fears and worries about adopting digital. So we know the over 60s, 60% don't adopt digital because of the fear of security and fraud. And the population which you benefit most are the 40 to 49-year-olds, because that's the Generation X. That's where the curves cross. That's the population of people who have the right financial literacy and well-being and have the confidence and skill to take advantage of the opportunities you get from online.
By the way, a little data point here. My father is 80 years old and is a computer science professor, and he's been in the computer business since 1961. And he doesn't believe in online banking. And when you ask him, he insists that it's not because he's a doddery old codger who doesn't know how to use a computer. He repeatedly sends me interesting things from academic security mailing lists about the staggeringly shocking flaws in the way that financial services and other important services are delivered with security holes in them. I do, however, have a sneaking feeling that it might be something to do with the fact that he's over 60. Daniel, what were you going to say?
No, I just had a comment because I think looking back at what the Baroness Philippa said earlier, which was sort of surprising to me, but I think it's a wake-up call as well, that what we're talking about is actually two very different groups of financially excluded people. It was surprising to me with the staggering numbers about using UK as an example, right? And I think it's important now that we have a bank representative as well in the panel to discuss the UK as an example, because there is a high number of financially excluded people in the UK. Now, who are they and what do they need? And I think that's a valid discussion to have, because the way I see it, I think that most of the problems that they have, I mean, they need better access to credit. They need access to cheaper and more fair credit, even though they're having a struggle getting a line of credit because there's little or no data on them to do a credit score on. You could probably attack that with technology. And I mean, we heard earlier that people will use social graph in order to give you a credit rating and so on. So there's new models there that can address that problem. P2P lending as well is an alternative to address these challenges. Now, it seems like they're not educated enough, as you mentioned, in the usage of financial services. They have access to them, but they're using them wrong, right? Why don't we just give them a PFM tool, which is good? I mean, why don't you just issue Brett King's Movin' app to these? I think it's a discussion about social responsibility that the banks need to address to say, are we willing to give them better tools in exchange for lower return on these customers? Because you guys make a lot of money on bad credit. Or do we want to have the social responsibility, reduce our revenue on these bad credit customers, and give them good tools and educate them? That's very important. So that's group number one. Group number two is the other group that has been addressed earlier, which is the developing markets, which we can address later on. But I think we should address this now.
Yes. In fact, maybe I should turn to Nick. I mean, I know this is a pet topic of yours about the underlying reasons for why people are excluded.
So I think there are three reasons why people are underlying and excluded, and some of them have been touched upon. So first of all, the first reason is access. Accessibility to either financial services or digital. Okay? So access to financial services, I think, has been well discussed today. First, the primary issue is identification. Second issue is around creditworthiness. But it's more profound than just people asking for credit line. You know, what we're talking about here, there are 1.5 million people in the UK who don't have a bank account. They're the unbanked. And the profound and social issue around this is, you know, they aspire just to be able to have pride in the ability to have access to a bank account. You know, it's not even as sophisticated to say I want to borrow money. It's the ability to have the pride to say I have somewhere where I can start to save or hold a little bit amount of money.
And can I just check that's not a migration problem? It's not that the reason they have no bank account is because they have no right legally to be in the country and therefore they can't get one. It's a separate issue.
No, I mean, that's a small part of it,
okay,
but I don't
right.
think we could blame the issue. Clearly, you know, the greater levels of migration into the country creates a challenge for those types of customers, but you know, we've had around 1.5 million people unbanked for many years, so you know, it hasn't necessarily changed the numbers massively. Access to digital. Well, access through infrastructure today is predominantly there. Most people have smartphones. Access to Wi-Fi is generally available in the public. There's a lot of debate, political debate, around how quick it is, but the fact is, speed of Wi-Fi and broadband isn't really an issue for this type of use. So you get to the second course, which is awareness, which is understanding the benefits that you can gain from being online. Now, we know that for customers who can take advantage of all the benefits of being able to purchase products and goods and services, it's worth around £744 per year per person. It's around just over £500 per year for a family income of less than £15,000. That is a huge proportion. Save money.
Right.
That's worth 10 weeks of shopping for most families. So there's quite a profound saving. But of course, you can't buy things online unless you've got a means to do it. And you typically need a financial product to that, either a bank account, a credit card, a prepaid card of some sort. So you come back to the issue of, and what our research shows with the unbanked, that they do it, but they borrow people's cards to actually access the services online.
So slightly scary conclusion there, that we've had 1 million and a bit people unbanked, not just in the past year, but for quite a long period of time, despite all our retail banks pumping billions of dollars into marketing and advertising to persuade people to open bank accounts. Nish, what do you think that means governments can do if the private sector in developed markets hasn't had a conspicuous success yet?
Well, I think we have a lot to learn in the developed markets from the developing markets, because one of the things technology does for us, it allows us to leapfrog legacy infrastructure challenges that we may have in some of these countries. If I can just give you a description of what's happening in India, you can read a lot about this in The Economist, who I think has given this phenomenal coverage and spot on in the way they've described it. Many in the room may not be familiar with the UID scheme in India, Aadhaar card. It's unique identification. This was started about 6 years ago by a chap called Nandan Nilekani, one of the founders of Infosys, whose dream it was to ensure that every citizen of India had a card. I forgot my card. I have a card, and it has my picture and an address and a barcode, and I am by that a citizen of India, whatever you may determine that to be. Interestingly, he decided to launch a fresh identification scheme rather than go down the road of using the voting system, which already had nearly 900 million voters registered. As of today, the numbers are around 750 million people registered. The government pays about 40 pence per registration. And the registration is your finger biometric, each finger is recorded, and 2 eyes, your retina scans are recorded, and you receive a card. And the idea is this card will enable you to open a bank account as well as take out a mobile phone or avail to government services. And the plan is once everyone is identified, the government would change the flow of benefits and the welfare scheme, which today is about $250 billion per annum, goes into welfare. And that is for a country that only spends about 1.4% of its GDP on welfare. $250 billion will be paid directly to the beneficiary through their bank account. So when you ask what a government can do to make those excluded, whether it's digitally or financially, but let's just use the term excluded, the government can use its weight of cash that it's paying out to make the model work. Now, if I'm sitting in the middle, whether I'm at the technology end, selling a service, or I'm at the delivery end with a customer, opening the account and facilitating this, I'm part of that chain. It doesn't need a lot to be paid in the form of fees to make it commercially viable. Now, in the previous panel, one thing I did want to address, a number of people said, what if we make it free? What if we make transfer free? Banking is not free. Let's get over this. And my God, if it is free, then you are being conned. Okay? Remember, in some of the European countries, like Sweden, where we've got negative interest rates, you are now paying for the privilege of putting your money in the bank. Let's accept that banking needs to be payable, because otherwise we can't exist. And if it's a social responsibility road that we want to take the banks down, it's going to be very short term. It doesn't last. It doesn't have a feeling of sustainability. It's sustainable if it's commercial. The governments can make it commercial by flowing direct, they're calling it direct benefit transfer, welfare schemes, social security, through these accounts. The same can happen in the UK. Whether it's 1.5 billion people who are unbanked, 12 million people who are likely to be claiming universal credit, was the number I got from the minister. Those funds can be directed through the government as a sender, and we can all be part of that value chain, and the customer gets to benefit.
Right. If you'd like to ask a question, by the way, please raise your hand. While people, and we'll get a microphone to you. Yeah, so I can't actually see the question popularity screen without turning around. So I'll do that in a moment. But before I do, let me just ask Nick, tell us about how governments should plan services. And specifically, following on from what Nish said, how much should governments in developed markets continue services that are, for example, delivered in post or over the phone, delivered in person or over the phone, where the costs are 10 or 50 times or 100 times the costs of delivering those same services online?
Yeah, I mean, let me answer that question first of all. The key thing for me is you have to give customers choice. So if customers want to choose to come in and talk to us face-to-face in our branch, then that's absolutely fine. Vis-a-vis, if they prefer to do it over the phone or do it online and self-serve, that's absolutely fine with us as well. We must give them the choice.
That's for you as a private sector bank?
As a private sector bank.
Right, but that's partly because you're in a competitive market. And if you say, sorry, piss off if you don't want to do online banking, you will lose business. But if the government is talking to people claiming unemployment benefit, then the government could, if it chose to, take a tough line and say, if you don't want to talk to us over the internet, that's fine, you just won't get your benefit.
Yeah. But the reason for doing this is to understand that we have, at any point in time, around 30% of our customers are in a vulnerable state, which includes financially excluded. You have to remember, financially excluded is not a permanent state, it's a transient state. People come in and out of being financially excluded. And for those customers, you need the opportunity to be able to sit down and talk to them, and they need to be guided and supported. Now, to answer the question around the government, I gave evidence to the Science and Technology Select Committee earlier this year around what the government should do in reforming and reviewing its strategy around digital. The underlying thing, first of all, is its digital strategy should underpin the government's current objectives. If it creates a competing digital strategy, we don't have the funding available to be able to do more things. So it has to underpin the current set of objectives. Secondly, skill is a key cause and a key issue, whether it's financial knowledge and skill or whether it's digital knowledge and skill. We have around 5 million people today who work in the public sector. These are the people who are typically going to come into contact day in and day out, whether it's through the library system, whether it's through the NHS, whether it's through the benefit system, where we will come into contact with these types of UK citizens who don't have the right knowledge and skill. And therefore, if we could leverage that workforce just to engage with these people and help them. You have to remember, 60% of the UK population have a mathematical age of 11-year-old. Yeah? So when we talk about peer-to-peer lending and all these financial products, would your 11-year-old son or daughter understand that? Because that's what we're talking about here. So the other thing that government needs to do is think about the education system. We have to think about digital skills being the fourth form of literacy alongside reading, writing, and mathematics.
Which leads to a perfect question that's being voted as popular behind you. Maybe, Daniel, you can give us a view on this. Is this evidence of a market failure? Rather than having governments intervene, should we have private sector entrepreneurs seeing those 60-odd% of the people with a low level of maths attainment and consequently financial literacy? Should that actually be addressed by the market?
Absolutely. I mean, reverting back to what was said by Nish as well, I started my initial comment here saying it's fine to make money on stuff that's good. Relating also back to the comment about social responsibility. I think social responsibility should be part of what you do, and you address that towards the ones that needs it the most, which was my point, which also leads to the answer to the question, is that if on the lower end of your customer scale you have customers that you exploit, and this is like undebatable, there are ways to shift that around, and banking should not be free. We agree upon that. The question is what services should make the revenue to cover the other services. This is known already. We have a ton of different services inside bank. I mean, we deliver software to banks. We know how this works. And there's a lot of different services that subsidize the other services. The question is which one subsidizes what. So if you're willing to add to the private sector and use the private sector's position towards the customers, in this particular case, banking customers, and you give them, for instance, PFM tools, that gives you a dead stop, right? And we can't say that they're not connected or anything. They all got mobile phones. They're all connected. ID is a huge challenge, and we should probably address that afterwards because that's related to what the government should do. The example from India is perfect. and we need more of that in order to get those stuff issued so that people can get KYC'd and everything. But the important thing is for the customers that are failing, the 11-year-old, the person with an 11-year-old understanding of financial products still has a smartphone. And that population is basically growing, right? With immigrants and everything, we will just grow that piece of the customer pool, and we need to address that with services that are probably social responsible, that gives a dead stop, that educates them on a service level. You can't go back to school and learn them. These are people that are coming to our customer pool, and they don't have the education. You can't address those through changing the school system. They're lacking that education already, and they will not go back to school to learn that. So we need to address that through the products. You give them the products, and the product educate them. So yes, the answer is yes. The service providers have to educate their customers in the tools. That's why also the tools needs to be personalized, so that you get a different experience than I do, and the person that has the understanding of an 11-year-old gets a different tool. And that's where the social responsibility comes into play.
So it sounds like you're saying three things. One, cross-subsidy.
Yes.
That the financial services institutions have to provide services free of charge in order to help people, and they will be subsidized by other things. But the good news is that the marginal cost of delivering one PFM product to one customer is so tiny that it's not very distortive. The second is your best example is personal financial management tools. Are there any other products in a line that you think ought to exist that don't exist that can mitigate this exclusion?
Well, I'll rather pull it towards the revenue side on the bank end to address that, because if you look at examples like Alipay, right, we all know that, and it's super scary. The platform that they've made is basically the same platform we're now giving to banks. We're licensing that to banks. If you look at the model of Alipay, and you look at how you can make revenue on giving away services, right? So they gave away a P2P capability, building up install base on one side. They solved the problem. The problem is known, and Pesa did exactly the same. Pingit is trying to do it here. So they're solving it on that end, and that's free, right? And it costs money to do that. Now, on the other end, they're providing merchant services, brand new merchant services on a proprietary set of rails. There's no Visa, no MasterCard, no nothing involved. It's completely end-to-end on-us transactions. That means that they're super cheap to produce, and you can go into the merchant space and offer these illiterate, financially excluded users of the P2P scheme to pay to their local merchant. And you're switching that transaction away from P2P to P2M. You're paying to a merchant. It's a merchant transaction. That transaction is worth a lot of money. That's how you can make the money on the merchant and then balance your social responsible educational scheme providing P2P services for free. This is just an example.
Right, which I think is a perfect moment to bring Nish in, because the most popular question at the moment says, wouldn't the good old post office account from 50 years ago solve these problems, potentially subsidized by the government? So for those people in the room who haven't had a good old post office account, essentially it's about the country's largest distribution system by branch network, because instead of there being dedicated branches for financial services, there were financial services delivered through the post offices that sold you stamps and delivered packages to you. And it was about a super simple product that involved a paper book in which your balance would be written. I'm not even sure whether they had a computer system at the time. Nish, you've got strong views on the question of what government and business can learn from each other. How do you evaluate that as a solution to today's problems?
Well, it's a solution that is coming back up the list. Sorry to bring up India again, but it's a country that I spend my entire life in. Our biggest competitor today is the Post Office, who have just received a banking license under the new government about 6 months ago.
So you're no doubt delighted.
Well, I'm delighted, yes. But actually, I feel that there is still an edge that we have. And I'll tell you what that is. And Nick mentioned it slightly earlier. Financial exclusion is as much about social exclusion as it is about lack of access to products. If you're a customer, and I find this from my customers, and I give them in India what they call a basic bank account. It's a horrible term. Previous to that, it was called a no-frills account. It's almost like labeling someone and saying, well, you're poor and this is all you're going to get. Straight away, the customer says to me, do I get a checkbook? Do I get an ATM card? Do I get... And my initial approach was, you're lucky to have this. But actually, they're right. Why not? And if you say to this customer demographic that the only way you're going to have access to a savings facility, an insurance facility, a transfer facility, is to go into a very old building, which is a post office, where the person inside it used to treat you as if you had leprosy, which happens a lot with those who are excluded. Would you want to do that? Or would you want to go to the same place as someone who you aspire to be and work and manage your money in the same way? I believe it's the latter.
So I think what I'm hearing is, yes, in principle, it would be lovely for the government to provide services free of charge
Correct.
for the unbanked. The small drawback of that is it will then make it commercially unattractive for anybody else to do so.
Correct.
And the result will be that the quality of service will be the kind of quality you get from a taxpayer-funded service where you don't pay at the point of delivery.
Slight change. I never see I don't agree with the point that the government would ever need to subsidise the delivery of these services. I think if that were to happen, we would be in a very poor place. I do believe in the banking model, whether it's Lloyds or their peers, but using the weight of money that the government has under their control, they can make that delivery model commercial for those who are the actors in it.
Right.
Okay, so you don't need to pay the post office to say, please provide one of these books to your customers because the money that the money that we want to flow through these accounts is universal credit or welfare. In fact, the previous minister had the same discussion with me, where he said the bank's first approach into his room were, how much are you going to pay me to deliver this service, whether it's through post offices or through my own branches? My argument to him was, they should be paying you, because I want X billion every month coming through my accounts. I make money on that float.
Right. Interesting analogy with other public sector activities, such as tendering railway lines. Where in Britain there's an auction held by the government for who will bid the lowest subsidy for the right to run a railway line over a period of time. So no meeting at Bloomberg would be complete without a little bit of banker bashing. And it looks as though, Nick, you may be the victim today. So a question is, what are banks doing to tackle double standards in approaches towards tackling financially excluded customers? So can you begin by pleading guilty to double standards and then apologise, and then you can answer the question?
I generally don't understand what double standards refer to. Clarify what you mean by that.
The reason I read the question off the panel is actually I'm not entirely clear either. Could the person that wrote it tell us what are the double standards?
You are in the room.
It was actually Michael Bloomberg that wrote the question.
No.
So in that case, let's reframe it. Let's reframe it. Do you believe there are any double standards being applied?
So, I mean, I'm slightly confused with just the last 5-10 minutes of conversation, because we do have social bank accounts available to customers today, which are fee-free. There are no overdraft charges. You can't go overdrawn. There are no ability to charge for direct debit, standard orders, failed payments. We remove contactless because transactions below £15 don't come online, therefore you could go overdrawn, so we remove that to protect the customers. This product is accessible through any channel, it's multi-channel, and therefore, and that's the starting account for customers to use to get onto the ladder of banking.
So just to clarify, Britain is one of the markets in which there can be free banking because of cross-subsidy from other products and services.
Those social accounts have been available for a long time, but they've been relaunched across the industry in January of this year.
Right.
We provide a lot of those accounts to a lot of customers. We also upgrade customers from that account to a full facilities account once they've established the ability to manage their money appropriately, build up a credit history, and therefore we can create a pathway for them to increase their financial capabilities and access to financial products.
And can I just clarify, do you think that the philosophy behind those free banking products is cross-subsidy across customers or cross-subsidy within a customer? I.e., within is, I'm happy to give you a free bank account because then I can sell you car insurance. Whereas cross-subsidy is, your NPV to me as a customer is negative, but that's okay because I can find different customers on whom I will make profits.
Look, Lloyds Banking Group is the largest bank in the UK. Without a healthy banking system, we don't have a healthy UK economy, and vice versa. Our overall purpose is to help Britain prosper, and that means everybody, irrespective, we have to support all ends of the spectrum, whether you're wealthy or whether you're just starting on that path, whether you're a small business, whether you're a large corporate. And therefore, we try and meet all of our customers' needs across the UK. We don't exclude, we try to include everyone, whether it's on a digital basis or a financial basis. The entry bank account that we have in the market helps people to get onto that ladder.
Great. So, Daniel, maybe I could give you the last word. We were talking before about the question of whether the problem will go away by itself. And I think you'd have to be a brave man to predict that poverty itself, i.e. financial exclusion, will go away. But do you expect to see digital exclusion behave over the long term in the same way that literacy has behaved, which is that for 100 years or more after the introduction of near universal literacy, there remains a minority of 10, 5, or 2% of the population who never quite get on the ladder? Or do you think that because of the nature of the technology, digital might be different?
No, I think we will see it actually going away by itself. But there's two ways for that to happen. It's either naturally or it's sort of infused by commercial interest. Once again, using Alipay as a great example to sort of mimic this, we can also point towards M-Pesa and say technology will probably be the tool to drive the adoption of these services and thus give everyone access. If you look at the Chinese manufacturers of smartphones, the price is dropping like crazy. The underdeveloped markets are getting access to these tools. You see funny examples posted on Facebook, they're probably true, where you see a guy, he prefers to sort of charge his mobile phone rather than sort of buying food. So they need to be connected, and because of the low cost of telecommunications and the subsidizing actually for telecommunication licenses by the government in these regions, you get coverage. Power is sort of being solved by many players. Local production through solar, which is green, are powering the stations. People are powering their phones. People get access to smartphones. And once again, using the M-Pesa story and Alipay as a great example, you give those people access to these services for free in order to get them onto the platform and then obviously monetize it later on a different sort of diverse platform of products. And once again, then Alipay is a great example running on the same piece of technology that we've written where you say that you're giving away services on the left-hand side for free. And then all of a sudden, when you got 400 million customers on the platform, including those that were completely digitally excluded priorly, you offer them interest rate.
Yes.
And then they start to deposit money with your system. And then all of a sudden, you're top 5 deposit bank within 4 years. All right? So there's ways to do that.
That line you said earlier about people preferring to charge their phone, use their money to charge their phone than to buy food, reminds me of the situation 10 years ago when people were talking about the Crackberry. You can see the importance of the device there. Let's wrap up just by asking everybody in the room. I'm sure that many of you will agree with Daniel's view that digital exclusion will go away by itself. If you disagree, could you raise your hand? And I'm going to pick one of you at random and ask you to stand up and tell us why you disagree.
Thanks for pushing me on the spot.
Microphone?
I think the analogy with literacy that you had.
Speak very loudly.
Okay.
Fantastic, thank you.
You drew in there's an analogy that you, Tim, drew with literacy, where literacy 100 years after the introduction of books, universal education, and the rest of it, is still somewhere in the 90s, but hasn't quite reached 100%. I think this is a more complex problem. Firstly, it relies on literacy. If you're illiterate and semi-enumerate, which some portion of the population are, I struggle to understand how you'll be banked and able to manage your finances. Secondly, there's a whole load of other dependencies beyond that. So there's the technology access, which there are huge strides being made on. As you pointed out in developing countries, there are people on annual incomes of $200 a year who still afford a $30, $40, $50 mobile phone. So lots of progress is possible, but given that there are quite so many dependencies to multiply together, being literate, being numerate, having the technology access, being KYC'd, as we heard earlier, kind of at huge length, and depending on what product you're talking about, having a credit rating system that is very broken at the moment, being able to sort you out, I guess that's where the skepticism comes in. So many dependencies.
Terrific, thank you. Charlton, just a question for you. Would you like the panel to continue sitting here while you wrap up, or to depart and then allow you to wrap up? Terrific. Okay. Well, I'd like to say thank you very much to all the panelists, and also to the very stimulating and interesting questions that we got. I feel I've learned a lot, and I think that many of the rest of you will agree with that. Thank you so much.